Alright, hello and welcome to Camel Finance. I'm your boy Camel, and in today's episode we have got some energy stuff, some central bank policy, of course plenty of technicals, a discussion about Bitcoin, plenty of stuff to do with Bitcoin adoption, plenty of psychoanalysis from the King of Cycles, Bob Lucas. We've also got a very important update to the Bitcoin Core. Bitcoin Core 24 has just been released, so we're going to go over that. Going to talk a lot about adoption, going to talk a lot about whether or not a recession is coming, and of course some stuff to do with Elon Musk and Twitter and the Everything app, followed by some technical analysis ready for the week ahead. So if that sounds like the sort of thing you're going to enjoy, hit that like button, sit back, relax and enjoy today's episode. Today, the average UK energy bill is £450 a month, whereas in Russia they're paying £40 to £60 a month. So begs the question, doesn't it? How are those sanctions working out for you? The Bank of England could start to cut rates to offset a deep recession, according to the Deputy Governor. So, I mean, we know everyone's going to start to cut rates eventually. We know that probably as early as next year, we're going to start to see these the end of this rate hiking cycle and the pivot to cutting rates. But first, I think a pause is most likely. The Bank of England has of course, lost control. It has been forced to start printing in the middle of a hiking cycle to save and bail out its pension funds. I wonder if therefore we're going to see the Bank of England take the lead and be the first to start cutting rates aggressively. I still think this is likely going to be a couple of months away at least, and I still think there's time for more upside in the meantime. That of course remains to be seen. One thing I do know for sure is December is historically a tough month for the dollar. If I hop into this dollar index seasonality chart here, you can see that December is not a good month for the dollar historically, which usually means that risk could come on strongly. I guess it begs the question, doesn't it? Will we see a Santa rally this year? Is a Santa rally even real? For those of you that never heard of a Santa rally, this is quite simply a rally in everything that happens over the Christmas months. Some people hypothesize that this comes from Christmas bonuses entering the markets. Perhaps it is a self-fulfilling prophecy in the sense that people know that there's a good chance that the pump's going to happen, and as the pump starts to happen, they start to throw money in the market, and then it goes round and round like that. Bitcoin historically does very well in December, and in December 2018, which was the last time the Fed was tightening in this sort of kind, risk actually bottomed. Risk bottomed on a declining dollar. So could this repeat again this year? Quite possibly. The King of Cycles here, Bob Lucas, is showing that he thinks we likely have seen the 3-year cycle top for the dollar. And so if I hop into this chart here, you can see he thinks this is likely the 3-year top. We've had 2 years going up, and now we should have at least 12 months of decline for the dollar. Of course, this should be, and has historically been, very good for Bitcoin, as well as risk assets. Bitcoin has witnessed a typical bear market capitulation. Its realized profit and loss ratio hit new record low levels. So again, getting towards the neighborhood where we should expect a low to form before too much longer. You do know that below 10k Bitcoin probably means that Coinbase or Binance has to explode, and or a nuke is flying towards DC. It's probably not something anyone should hope for, shake my head. So I have of course been cautioning against this sort of wishing for a while. I understand that everyone wants as much Bitcoin as they can possibly get their hands on. I understand that. I understand that at the current prices it's not really affordable to a lot of people. I understand that as well. But as I keep saying, remember to be careful what you wish for, because another leg down to 10, 12, 14k is going to start to cause serious technical damage on the chart, and I don't think that we can just wick down there and then come back up and start a massive bull rally. For all of you bears out there, one possible black swan event could be the Credit Suisse blow up. Now, Credit Suisse has had a bank run of $1 billion a day, and at this rate, they're not going to last another 2 weeks. So something has to give here. This could well be the black swan event. Maybe this is what causes a huge pullback, or maybe absolutely nothing happens. One thing I do know though, if you're one of these people that says, oh, recession, well, you might want to just reassess the situation, because this is the most anticipated recession ever, as you can see. Way, way, way beyond 2008, 2000, 2019, okay, way beyond all of this. Is this the first time everyone's going to be right about the recession? I don't think so personally. Of course, I could be wrong. However, taking a look at the US consumers, they're just not giving up. In 3 to 6 months, they likely will feel the pain. But before that happens, we've got all-time highs in the stocks ahead. And you can see here, Black Friday online sales topped $9 billion in a new record. The consumer's not in pain. We're not in a recession. Like, this is not recession behavior, is it? It's really hard for me to say that we're in recession behavior. especially with the stock market behaving like it is. Plenty of stocks are at all-time highs. That's not something you see at a recession. So I believe it's coming. I agree with you, but we're just not quite there yet. Bitcoin is historically oversold. Periods of undervaluation like this do not come around very often, and they certainly do not last long, historically speaking. Ever since 2014, these signals have preempted the end of the current market cycle and the beginning of a new one. The breakout of an RSI downtrend with a backtest has been completed, and the same is true of a bullish MACD cross with a backtest. So if I hop into this chart, you can see down here, breakout retest looking to resume, and the same deal on the MACD with the cross bullish as well. Bob Lucas has pointed out that, look, Bitcoin has either found its bear market low, the 4-year cycle low, with the November low that just formed about 17, 18 days ago, or it will do in the next 60-day cycle due around January 5th. Either way, now is the time to be DCAing in. Now is the time to be averaging down, averaging in, and starting to accumulate and build a position. Just waiting for a number that you've picked in your head, like 10K, which may never come, is not necessarily the strategy. Given the contagion and the loss of trust with the recent events, he is leaning towards another low early January, but structurally, it's been a perfect cycle so far. So there's nothing to say this could not be the low, and there's also nothing to say we couldn't have one last lower low. But I would argue, what's a few thousand amongst friends, right? Start to average in a position, average down a position. You do not want to miss this upside reversal. If you've been on this channel before, you probably will have seen this, particularly if you joined recently. This is the Wyckoff accumulation with the spring that I think we're possibly working on but haven't completed yet. As it turns out, there's also a second Wyckoff accumulation with spring inside of the spring of this. So if you zoom into a 4-hour chart inside of this spring area that we're in now, you can see we may well have just completed a spring test and now working our way out. Interestingly enough, if we complete this accumulation, it will confirm the spring back above 17.6. So we've got Wyckoff accumulation inception going on here. Bitcoin Core has released an update, and this one's come with a lot of controversy, so I thought I would just quickly take you through this. The update is about the mempool full RBF configuration. So let's break this down. The mempool full RBF refers to the Bitcoin memory pool, which is like the waiting room for the unconfirmed transactions on the Bitcoin network. The RBF stands for replace by fee, a mempool policy that allows nodes to decide between conflicting unconfirmed transactions based on the fee rate. Prior to this update, the mempool accepted whichever transaction it saw first. In 2016, with the introduction of Bitcoin Improvement Proposal 125, Bitcoin Core used what's referred to opt-in RBF, where transactions in the mempool can be replaced if they signaled they're replaceable, i.e. they opted in. This release introduced full RBF, which allows full replacement of any transaction as distinct from only replacing transactions that opt in to it. So why is this controversial? Well, there are industry players that are currently using zero confirmation transactions in their applications. So to put this another way, they're accepting payments which are just sitting in the mempool. This is something that everybody knows is theoretically dangerous, but hasn't been an issue. Because once the Bitcoin network has fully propagated non-replaced by fee transactions, you needed the collaboration of a miner to replace it, which isn't easy to get today. Even though many of the biggest miners offer off-band transaction broadcasting services, they currently won't process conflicting transactions, double spends. With the introduction of full RBF, these zero confirmation transactions are simply too risky. The chances of facing a double spend have gone up significantly if you are someone who is accepting zero confirmation transactions. So why did the protocol developers push this forward with this change? Well, it's all to do with scaling. They wanted to scale this thing up. But the whole point of Bitcoin blocks and proof of work is to solve double spending. When a miner receives two conflicting transactions, the highest security policy is to have them take the higher fee. It's better to make an assumption that a miner is rational, i.e. will want more money, will want to take the higher fee, than assuming the miners are nice and are just going to do what's best. All comes back to that don't trust anything, verify, right? But unfortunately, while scaling Bitcoin through zero confirmation transactions looks tempting, because of course, if you don't need any confirmations, then we can just process many more transactions, and we're just trusting that eventually they'll be picked up and mined into a block, which of course they will. However, this does reduce the security of the network because it can allow for double spends in the sort of short term. The reality is it's not possible to do so without damaging security, and that's why we have the Lightning Network. So the takeaway here is, if you are sending Bitcoin, and particularly if you are a merchant that is getting paid in Bitcoin, it is imperative that you do not accept zero confirmation transactions. Make sure you use at least 2 or 3 confirmations to ensure that your transaction has been permanently mined into a block and added to the blockchain. Make sure that that's what you're doing if you are receiving Bitcoin, because you don't want to have to go through the hassle of accepting payment for something and then your transaction gets stuck in a mempool or could potentially be double spent or any of this sort of thing. So make sure that you don't trust, you verify, and make sure you have verified that you have had the confirmations of your transaction when you use Bitcoin. Of course, just using a Lightning node or a Lightning network channel will be more than sufficient to have assurance that you have indeed completed your transactions. So anyway, that's that. I don't think it's a big deal, but it has indeed caused a bit of controversy, and hopefully you can see why. 17% of Americans hold Bitcoin. You can see Bitcoin here. We are still so early, as you can see in this S-curve of adoption. This would be 2030 here. Is it unreasonable to expect the adoption to be somewhere up at this 70-80% by the end of the decade? I don't think so, personally. A huge Bitcoin poster is spotted at Zurich Airport. The best performing asset of the last decade was, of course, Bitcoin. Nearly 180,000 Bitcoin have been taken off exchanges in the last month alone. This is bullish. One, because people are holding these coins ready for the bull market, but it's also just good practice. Remember, do not trust the exchanges. Make sure you own your own crypto. Make sure you take full responsibility and bear the ultimate bearer asset. Small trader put buying, 10-period moving average, has officially reached C19 levels, and we know what came after. What came after, of course, was a massive upside rally, kind of like what I'm expecting to see unfold over the coming weeks. Elon has apparently been posting this thing about Twitter 2.0 and the Everything app, so that all sounds convenient, doesn't it? One app to rule them all. Down the bottom is payments, which is very interesting. We will likely see crypto integrated into Twitter before too much longer. I noticed this, encrypted DMs. I've made the case before, and you can go back and watch that if you're interested, that Elon is likely building a WeChat competitor, such as what they use in China, which has their social credit score system and their special jab passports and encrypted messaging that the government spies on and then docks your social credit score, depending on what you say. So I do wonder if that's what all of this is going to turn into. Whether or not I'm being too sinister and too pessimistic about all of this remains to be seen. Perhaps Elon's heart is in the right place. Again, time will tell. Dollar, not really showing any strength. Can't really find anything. As per our seasonality chart, not really surprising here. I wonder if we could get all the way down to 100, somewhere between 100 and 102 by the end of the year. That would kind of be my target. I think maybe we could bounce down here and chop around a bit by the end of the year. And I think that would be really good for risk assets too. Let's take a look at the yields. Again, does not speak to bullishness, does it? Does not speak to risk off at this stage. And the same is kind of true of this. This is kind of sideways on the 2-year, but that's okay. It's definitely a slower moving one. Looking to see if Geo can extend its gains, so that would be quite nice. Kind of already spoken about Bitcoin. Either this is the cycle low, or we've got one more due around this time here, the 5th or 6th of January. So maybe it's going to do a whole lot of nothing, or maybe historically, as it always does in December, it can catch a nice pump. So that remains to be seen. Keeping a close eye on that. I'm not really interested in any other crypto stuff until I can see that. Gold apparently pushing on the dollar's weakness, so that's kind of expected. Long and strong continue to push, and the same is true of silver, potentially leaving a cycle behind us. So hopefully we can get a push back up to the mid-20s at least for silver over the coming weeks. That of course remains to be seen. Have to keep a close eye on how all these equities open up, but there's no point because I've already covered those over the weekend. UKX, I'm noticing, catching a bit of a pullback, so we'll have to keep an eye on this as well. And the VIX is gapping up into resistance, but has not yet broken out. So is it time to long this? That probably means we're going to see a nice red Monday. I'm sure the bears will be high-fiving themselves here, but it's important to keep level. You know, the damage is not yet done. So this could easily just be a move into resistance and a rollover. So got to play patient, got to respect what the charts are telling us. None of the US equities are open, so I'll cover all of that tomorrow in tomorrow's episode. So looks like we've got some pretty red prices in the futures. We're down 1%-ish in the S&P and the Nasdaq, about 0.65% in the Dow. Is this a Monday shakeout before a turnaround Tuesday? I don't know. That remains to be seen. I will keep a close eye on that. Make sure you come back tomorrow and get tomorrow's analysis, because we'll see. Really, the closes are what matter today. If this starts to turn into a huge 2, 3, 4% moves, across the indexes, then we can entertain this as seriously leaving a top behind. But if this is just going to be a 1% pullback and then we can follow through and continue the upside tomorrow, then I wouldn't be too concerned about this personally. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, make sure you hit the notification button if you want to see how I deal with these markets in real time as a pro swing trader. If you have anything to say or anything you want to see from me, throw it down in the comments. And in the meantime, I hope you have a great week. All the best from me. Take care. Cheers. Bye.